Hello and welcome to Making Money. It's Matt McCall. It is Thursday, March 3rd. Pretty amazing. We're already in March. We got a lot coming up today. We have a lot of volatility going on right now with the markets. Obviously, everything that's going on in Ukraine is minute to minute. But at the same time, we have some sectors doing pretty well. Oil above $110 a barrel, hit 116 this morning. Gold's holding up pretty well. Silver's holding up pretty well. Bitcoin's still a little pullback, but looking good as well. But we're going to talk about a few stocks that, believe it or not, are hitting 52-week highs and that I think can continue to move higher. All that and more coming up right now on Making Money. All right, folks, once again, it's Matt McCall. Thanks for joining me. It is the 3rd of March. It is a Thursday. You can see a little bit of a different background, a very nice background, as a matter of fact. We are here on set shooting a new video all about electric vehicles. So get ready for that. It's coming out. So we're right now in Hollywood, Florida. I mean, look at this beautiful view. I can see the ocean. I can see the intercoastal. But because of that, we're going to keep today's show a little bit shorter. But I got a lot of information I want to get to and talk to you right now. So the markets actually opened higher this morning, and we've had a sell-off since then because there's a lot of unknowns still going on, obviously, over in Ukraine. We now have the S&P down about 1/3%, Dow's down about 1/4. NASDAQ, the tech stocks getting hit a little bit more, down about 1%. And I think a lot of that has to do with just looking at the 10-year yield. It's been all over the place. Right now, it's about 1.84%. Still well off the over 2% we were at not too long ago, because we are seeing that flight to safety money coming in to bonds right now. I mentioned oil. Oil hit $116 a barrel overnight. It's about 110 right now. Keep in mind, remember COVID? Does it mean you remember COVID? In Florida, there's no such thing as COVID. You never have to wear a mask. But remember COVID back in early 2020? What oil was at? Oil actually went negative. Believe it or not, I'm not getting into how or why. It was actually negative. And now we're at $116 a barrel. It's amazing. It's really pushing stocks higher. But let's take a look real quick at a couple charts. We want to take a look here at the S&P 500, just really quick to show you where we're at. As you can see, earlier today, we actually hit a 2-week high. And again, we're down about 1/3%. No big deal. We're going to see a lot of volatility. I think that at some point in the near future, Putin's going to come out and realize that he's screwed. He's united the world. He tried to tear us apart. He united it. And these Ukrainian fighters, I got that blood in me. My grandfather was born in Kyiv. These Ukrainian fighters, they are really, really not backing down. And the only way that this ends is if Putin pulls out, or it's going to be a 10-year war probably, because there's not enough people. I read today that for every 1,000 residents of Ukraine, the amount of troops Russia has is 4.8. And it looked at past conflicts like this and that failed. And normally it's about 10 to 15 per 1,000. And a lot of these Russian troops, it's like shooting your cousins out there. They don't want to do this. They're giving up. They're turning around. It's going to end sooner rather than later. But I've talked about the last couple of weeks, when you have geopolitical issues like we have right now, historically, we bottom in 3 weeks after the bombs start to fly, which was a week ago on my birthday. 3 weeks, and then usually within 3 weeks after that, the market's back to where it was. So it's like a 6-week process. Obviously, that's the average, but I see something similar happening here. We've priced in what I believe is really the worst case scenario when we look at what's happening in this market. Higher interest rates, inflation to 40-year highs. We have the pandemic still going around some places, depending who you talk to, and then we have this conflict in Ukraine. All that together, my God, like you would think when you read the headlines that you should sell every stock and build a bunker. That's not what you should be doing. You should be buying stocks right now. This is one of those times where a crisis equals opportunity, folks. So speaking of opportunity, today what I want to do is I always look at stocks that are pulling back. What about stocks that are actually doing well, that are breaking out right now? And you're going to see there's a common theme in a lot of stocks we're going to take a look at. The first one, Checkpoint Software. It's a company based out of Israel. Down about 3% today, but as you can see in the chart, what a nice move. It's a software company that does, guess what? Cybersecurity. And think about what's going on right now. The wars of the future won't be fought really like we're seeing in Ukraine. It is going to be right now people concerned about Russia and other nefarious countries hacking into power grids, hacking into large corporations. We see it all the time, and these stocks were really hot for a while back, in the mid-2010s or so. but it's really they've come back, and they've just come back on the scene as of late. So Checkpoint Software, that is a company that I think you want to put on your watch list. You don't buy stock hitting a high, but you do put it on the watch list. And what I like about it is, at the end of 2020, it gets about 45% of its revenue from the Americas and 43% in Europe. And Europe obviously is in more danger, I believe, of Russia attacking them right now through cyber terrorism than anybody else. The next stock we're going to take a look at is CF. And CF, if you don't know what it is an agricultural company, CF Industries. Symbol CF. Stock's up 2.5% today, breaking out to what appears to be an all-time high here for the stock. I mean, my goodness. This is, I talk about 10 baggers a lot, right? You go back to 2005, this stock was $2.50, and now it's at 87. It's an agricultural company, so you don't always have to bet on what you perceive to be the high-risk companies. CF, it's a leading producer and distributor of nitrogen fertilizers. And the reason that this is doing well, do you know that Russia's the number 1 exporter of wheat, and Ukraine's the number 5 exporter of wheat? So obviously we're shutting off Russia to the world. Ukraine's obviously having its issues. They're not going to get the wheat out like they used to. And then it turns back to a lot of, obviously, wheat prices going through the roof. But at the same time, the fertilizer companies are doing really well also. And this is, you think about conflicts like this, how there's always opportunity. This is a great way to hedge your portfolio. And this stock was already doing well prior to that. In the same vein, you have ADM, which is Archer Daniels Midland. Very similar company breaking out to a new all-time high. They're a major processor of oilseeds, corn, wheat, agricultural commodities. So again, you start getting away from Russia exporting wheat, Ukraine exporting wheat, it falls on the other guys, and prices go up. As wheat prices go up, companies like this make more money. It's this trickle-down effect. Folks, I always talk about how investing is simple but not easy. It's very similar to getting in shape. Getting in shape is so simple. You stop eating Big Macs every day and you go for a run or a walk every day. But is it easy? No, it's so damn hard. I mean, I pride myself in being in shape, but I got to tell you, right now I'm feeling a burger. As soon as I get off here, I'm probably going to get one because it's not easy to do that. Investing's the same way. It's very simple. You invest in companies that you believe will be bigger in 5 to 10 years from now. It's simple. It's not easy when you have to watch the headlines about inflation at 40-year highs, interest rates are going up, war in Ukraine, and you sell everything because you can't see the big picture. But I'm telling you, folks, it is simple. If I can do it, shit, anybody can do it. Keep that in mind. Another company let's take a look at. This is one of Porter's favorite stocks, Hershey's, symbol HSY. Me being from Pennsylvania, I used to go to Hershey Park as a kid. I remember, I haven't been there in years, but I used to go. It's a leading confectionery manufacturer in the U.S., and that's about a $25 billion market. They control 46% of all domestic chocolate in the United States. I mean, Hershey's is on everything. I mean, they have all the Hershey's chocolate bars, Reese's, Kit Kat, Icebreakers, gum. It's sold in 85 different countries. But, just 10% of those sales come from outside the U.S. The majority of it is in the U.S., which is fascinating. Because if you ever travel Europe or Asia, you're not going to see Hershey's really out there. But what I like they've done recently, they've expanded. They added Amplify snack brands, which has Skinny Pop. You ever seen Skinny Pop? Pirate's Booty is a brand. They have a Tings brand, Smart Puffs. So they have expanded a little bit out into the snack business. And again, a company that, as Porter always said, great cash flow, great capital, great place to park your money. This is probably my favorite one I'm going to talk about here, and I'll tell you exactly why. Hormel Foods, symbol HRL. Anybody ever hear of Hormel Foods before? It's its namesake, of course, Hormel. They have Jennie-O, Dinty Moore, Applegate, Holy Guacamole, Skippy brand. But my favorite, and I always guys tell you where I came from, but what I grew up on, my mom, she was a specialty of making this, Spam. And I know in Hawaii it's a delicacy. I got to tell you, about 3 years ago, I saw Spam in the store, and I picked it up. I'm like, I wonder if it still tastes as good as it did as a kid. You slice it up, you fry it. On a good night, we'd have Vienna sausages, but in most nights it was Spam. You fry it up. Oh my God, it was not like I remember. It was not very good. But hey, nothing against Hawaiian people, that is a delicacy. They'd rather eat that than a filet over in Hawaii. But their company, 64% comes from U.S. retail, 28% sells to U.S. food services, 8% international. This is a kind of company that's one of those staple companies that will do well regardless of what's going on in Ukraine, regardless of inflation, because I think you're not going to worry about that because it's got this brand recognition. Two more I want to take a look at. One is Kroger, which is, again, very along the lines of this, which is the grocery store. It just came out with numbers. It's up 11% today. Kroger. Think about that. How you just go there and you food shop. But again, these are times like this. Even with inflation, prices are going up. But they've been going up for a while. But even with inflation prices going up, this store is able to pass that along to you, and your margins continue to be strong. And the last one more, is NTR, back kind of in line with some of the stocks I talked about, hitting an all-time high. It's an agricultural company. It was created back in 2018 when Potash and Agrium, they merged. It's the world's largest fertilizer producer by capacity. So again, you're seeing themes here, folks. And really, everything I talked about is something to do with food. And again, with inflation going higher, you're still seeing it. And inflation's only going to come down from here. We might see one more high tick because of the price of oil going up. But if you look at the core number when you remove food and energy, we're probably going to start seeing it come down. So again, just to wrap up here, and again, we're going to keep the show quick, dirty today. Keep in mind, within crisis, there's opportunity. Nearly 50% of NASDAQ stocks are down over 50%. And just to get back to even, if you're down 50% is a double. And I think a lot of these stocks, honestly, I've been putting my own money in the market almost every day, little by little. I don't know where the bottom is in this short-term pullback we're seeing, but I do know that corporate profits will be at an all-time high this year. And why do stocks move higher? Because they make money. So if corporate profits are at an all-time high, I don't care about the other stuff. Stocks will eventually come back to highs again. And we're going to see that very near future for me. So once again, folks, thanks for watching us here. We're in the beautiful Hollywood, not California, but Florida. Beautiful Hollywood, Florida, with the scene behind us. I want to thank the crew that's helped me all day. Fantastic. I can't wait to work with them again. But again, folks, this weekend, stay safe, be strong. Ukraine's in my heart. Obviously, I'm part Ukrainian, so I hope the best for that. Humanity and this war. And we'll be back Tuesday. I'm Matt McCall, and that was Making Money.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.